Yo, this is Midas. Let's talk about the recent news with the US imposing tariffs on Canada and Mexico and how we can best leverage this situation. So, disclaimer, this video is only for educational purposes. Make sure to do your own research. So, starting off, why is the US imposing a tariff? I don't think it's because of Canada or Mexico not protecting the border from illegal drugs, which is the current sentiment. I think it's because, well, first of all, it's not because of this, because the US is the main buyer of drugs from Mexico and guns are coming from the US into Canada. I think it's like both sides of the border need fixing, not just Canada or Mexico. I think this is purely a negotiation tactic. You can read his book on this, on Trump's book called The Art of the Deal, where he causes, or the best way to negotiate something is to cause an unprecedented event to cause that large shock factor in order to make negotiations easier. And he's currently doing that with the tariffs were expected in March, and he fast-tracked it to February. I think Trump wants something, whether it's economic leverage in North America, relying on domestic supply chains, pressuring Canada and Mexico into renegotiating trade deals that are more favorable for the US, or it could be protecting the US industries, encouraging talent to move to the US by making products more foreign and more expensive, following that US first principle when he was first elected. This video has a lot of text, so it's more of an economic video, so bear with me. But the three outcomes of the tariffs is negotiations on trade deals. This is a very short-term thing, but let's say that Trump pulls off in his tariff threats and Canada and Mexico are pressured into a new trade agreement, which happened in 2020 with the USMCA. So it happened before, wouldn't be surprised if it happens again. But it's looking to be more of a long-term tariff war, which I feel like is the current state. From Canada has already retaliated with a 25% tariff back from the US, still waiting for Mexico to do the same. China and Europe are also might be facing tariffs by the US. From the state, businesses will be hurt, increased consumer prices, and economic growth will decrease in all of those countries. Now, finally, the last outcome could be military conflict. I feel like this is most unlikely, but still a possibility. This means that the US decides to use force on both Canada and Mexico, and that could lead to a recession or something worse where we're not worrying about our stocks or cryptos anymore. Now, for how we can leverage these tariffs. So focus on companies that do not rely on foreign supply chains because of those tariffs. This means software companies like Netflix or Tesla or Reddit, American-made companies like Tesla. Tesla's all its factories are produced from where the factory is originated from. So if it's America, it's America. If it's Europe, all the cars are made in Europe, as well as domestic producers, US steel and aluminum companies, because domestic products for the US would be supplying all over to the US. Finally, with crypto, I think it's the greatest hedge. Buy Bitcoin. It's an alternative store of value. Despite Bitcoin crashing with the stocks and the crypto market, it's a lot better than tariffs weakening your currency. Canada already fell to an all-time low from the tariff announcement. So the best way to store your value and ensure that your currency is still valuable is to buy Bitcoin, which is won't, react to these sort of noise with tariff announcements and all that. And if you believe the US dollar will increase in value, convert your currency into USDC or USDY, or in the opposite case of the USD falling really low because of the tariffs, that's the time to buy in because we know that the US is a dominant country and also a superpower, and that won't change for many years. Also, short affected industries. So, Apple and Boeing inventory is made in China. So, that means a lot of the business is going to be affected. Short automotive and construction stocks. Higher steel costs will result in lower margins and profitability because most of the inventory is exported elsewhere and not made in America, as well as defense and cybersecurity companies. if war breaks out in the US will be increasing their military spending. So BBAI, Palantir, LMT, RTX, buy into those companies. Despite these tariffs, the best strategy is to hold and block out the noise. There's probably going to be more noise about different tariffs, different countries trying to enter into this tariff war. And I think that selling at a loss is just not worth it right now. And only holding cash can make you miss the bull run. And I say the bull run because I still believe the bull run is going to be happening. Like back in 2018, tariffs have happened before during Trump's presidency. Everyone thought we were going into a bear market with trade wars causing fears and FUD, but the Fed cut interest rates in 2019, which ended up boosting the value of many stocks. So many investors that just held cash or decided we were in a bear market missed out on a lot of substantial gains. And finally, yes, the bull market and the bull run is still alive. We have the first crypto president in all our years, Sui, Ondo, and Solana, all cryptos that I've talked about in this channel, have all sponsored Trump's crypto event. I highly doubt that they put all this money into creating this revolutionary technology in order to not see a bull run and also sponsor the first crypto president. Finally, Trump is investing 500 billion in AI. That's a substantial amount for an emerging industry. And I highly doubt that he's doing that just for show, but he believes in the technology and sees AI as the future. But yeah, that's all I have for today. Hold your bags, stay calm in this panic, and I will catch you guys in the next video.